Hey guys, welcome back to Stock Tricks with Nick. We kept raking in the gains with another record-breaking week for my account. An extra $409 due to 8 different trades. But before we get into any trade analysis, let's take a look at what happened in the market this week. This week kicked off earnings week for Q4, starting with Delta Airlines. With an earnings beat, that gave them clearance to take off on Monday, up 4.3%. And nothing could keep the stock from flying high. And I mean nothing. They literally dumped fuel onto an elementary school in California, and the stock price didn't drop at all. Apparently, Target was naughty in 2019 as they saw holiday sales come in lower than expected, which dropped their stock 6.6% on Tuesday. Now they're dangerously close to filling a gap from November, so in the short term, my price target for them would be 111. Morgan Stanley opened up 6% on Thursday after a huge earnings beat, but that wasn't their only news. After Tesla broke 500 for the first time, Morgan Stanley actually downgraded them to underweight, but rose their price target from 250 to 360. See, this is their way of telling Elon to stop doing that ridiculous dance on the grave of all the Tesla bears and to brace for a pullback. We also have Beyond Meat continuing their breakout that I talked about in last week's recap, up nearly 80% from their price last Monday. Then,
Taco Tuesday
rolled around, and LeBron must have been serving up real meat because shares dropped 13% from their highs. In reality, momentum traders were probably just taking their profits from Beyond Meat and pushing them into cannabis stocks, which lit up on Tuesday after taking massive hits to their price in 2019. The breakout of many of these stocks, including Canopy Growth, Tilray, and Cronos, could mark an industry-wide trend reversal. This was also a very busy week for me at work. So in the second half of the week, I took down my position sizes so I could focus on the ever-exciting Schedule P report. Any actuaries out there know that was just a joke and are probably smashing the like button to make me feel better. But I can't be too sad, as my account was up 3.3%. So I want to share my CGC, Twitter, and Tupperware trades with you. So let's head over to the eTrade platform to take a look at what made me successful this week. First, we have CGC, or Canopy Growth Corp. As I said earlier, cannabis stocks had a really rough 2019. And this stock went from around $50 to a low of $15. And since October, this has been trading in a relatively tight channel. So I took notice on Monday when the stock went up 12% and closed above the top part of the Bollinger Band. So on Tuesday, I started trading with 25 shares initially, but then an additional 75 when the stock pulled back. On Wednesday, as the trend continued, I got in with an additional 100 shares. So at this point, I was holding 200 shares with an average price of $23.50. At this point, I wanted to start scaling out my profit, so I sold 100 shares, or half my position, at $24.35. And with my remaining 100 shares, I just sold as the day went on and the price went higher. By doing so, I made $270, or 5.7% on the trade. Next, we have Twitter. And this has been somewhat of a long hold for me, because I got in with 50 shares at $33.34 on January 9th, and have been holding since. This is the benefit of trading different stocks because I wasn't just laser focused on Twitter and didn't get worried when the stock pulled back immediately after I got into the position because I still saw this gap that needed to be filled and thought the stock had potential to go up to fill it. My patience paid off as the stock ran 3% on Thursday, and even though it was downgraded by UBS on Friday and opened in the red, it pushed up throughout the day and closed green. This is a stock that I'll be holding over the weekend because I still think it has potential to keep pushing up to fill this gap. To cap off this week, we have the Tupperware trade. This setup was similar to CGC's as the stock was beaten down about half its value from November, but jumped up with high volume and closed above the Bollinger Band on Wednesday. So on Thursday in the morning, I got in with 150 shares at a price of $9.28. But this is where I got really lucky. See, I got a notification that said if I sold my shares on that day, I would be flagged as a pattern day trader and my account would be restricted for the next 90 days. Because I didn't want any restrictions on my account, I had to hold until the next day to sell the shares, which is unfortunate for me because my position was up 4% and I was ready to just take the gains there. But thankfully, the next morning it opened in the green and I was able to use a trailing stop to exit the position profitably. For those of you who don't know, a trailing stop is an order type that sells your shares once it drops a certain percentage or dollar amount from the high of the day. So for this trade, I said if the stock dropped just 5 cents off the high of the day to sell the shares and lock in the profit. That's all for this week. Please leave a comment to tell me how I'm doing so far. And make sure you subscribe so you don't miss out on any stock tricks or personal finance tips. Happy to say this again, but let's keep this flag flying for another week.